stubborn resistance of house prices to the negative forces of the pandemic is shown by the month-by-month data from CoreLogic, with the latest figures published yesterday. An analysis of the monthly figures for the past 5 months covering the pandemic period shows that, generally speaking, there's been a gradual deterioration in price outcomes. That's the national average, dragged down by the fact that the two biggest cities have prices falling at the moment. But there are many locations across Australia where prices are still rising despite everything. Now, looking at the average national result, house prices were up 0.7% in March, up by a smaller amount in April, down marginally in May, down by a larger amount in June, and then a similar, though slightly better, result in July, just finished. Now, that's the national average situation. But looking at the figures at a more local level, it shows that some locations have been more resilient than others. And the latest figures from CoreLogic show that half the market jurisdictions across the nation managed to produce some level of growth in their house prices during July. The jurisdictions I refer to are the 8 capital cities and the 7 state or territory regional markets. Now, of those 15 jurisdictions, 7 produced some level of growth in house prices in July, which is remarkable in the circumstances. Those figures illustrate a point I've been making regularly in recent months, that regional markets are generally doing better than capital city markets. In July, 5 of the 7 regional jurisdictions produced house price growth, compared to just 2 of the 8 capital city markets. The prices from the past 5 months deliver other important messages. One is that month-by-month figures can be highly erratic, so we need to be careful about placing too much significance on 1 month's results. In Darwin, for example, house prices rose in April, fell in May, rose in June, and fell in July, and that's according to the CoreLogic data, bearing in mind that other sources have different figures. In Hobart, house prices rose in March, they fell in April, they rose in May and June, and then they fell in July. Again, if you believe the CoreLogic figures. Now, another message in the data is that we don't have a single market in Australia. We have many different markets with different outcomes from one location to the next. And that's an important point because media is reporting that Australian property prices fell in July, when in reality there were price rises in places like Canberra and Adelaide and 5 of the 7 regional jurisdictions. And although prices overall fell in Sydney and Melbourne, there are locations within those big cities where prices are continuing to rise. Now, looking at the longer term patterns, some markets stand out for their consistency and strong resistance to the national economic forces. Canberra has delivered some level of growth in its house prices in each of the past 5 months. This tends to confirm our view that the national capital is the most COVID-proof city in the nation. Adelaide has also shown great consistency with small rises in 4 of the past 5 months, including in July. And that confirms my positive opinion about the solidity of this underrated city. 2 of the regional markets, South Australia and Tasmania, have delivered price growth in all of the past 5 months. And 2 others, New South Wales and Queensland, have achieved growth in 4 of the past 5 months, including during July. The central message in all this is that prices have not collapsed anywhere and some places continue to grow. And it's a different message to the one being delivered by mainstream media. One major newspaper has reacted to these latest figures with the claim that they show that house prices are plunging right across Australia, but nothing of the sort is happening. The CoreLogic figures indicate that house prices are higher than they were a year ago in 11 of the 15 market jurisdictions. And that simple truth demonstrates that the forecast back in March, April of a dramatic and immediate collapse of house prices were sensationalist nonsense. Now, referring to some of those predictions 4 or so months ago, there was a Budget Direct survey back in April, and at that time most Australians predicted property prices would fall in 2020. Not surprising, because that's what media was telling them on a daily basis. A Budget Direct survey conducted in April found the majority thought property prices would fall over the following 3 to 6 months. And of these, the vast majority expected an average fall of up to 20%, while around 13% of people surveyed predicted a fall of more than 20%. and only about a fifth of the people surveyed figured that the prices would rise, while some others thought there'd be no change in property prices. And those predictions were somewhat in line with the predictions made by major banks and research institutions. The University of Melbourne forecast a 4.5% decline in the June quarter alone, followed by another 2.5% drop in the September quarter. Meanwhile, in May, CommBank predicted the coronavirus-led house price drop of up to 30% was their worst case scenario, while the National Australia Bank also said in April that house prices could drop by a cumulative 30%. ANZ also said prices could drop by up to 13% in Sydney and Melbourne. But so far, nothing like any of that has happened. House prices have remained resilient. The CoreLogic Home Value Index for June showed that during the June quarter, national median dwelling values declined by just 0.8%. That's the national average, once again dragged down by the situation in Sydney and Melbourne. But four capital cities, Hobart, Adelaide, Darwin and Canberra, all recorded dwelling price increases in the June quarter, and so did most of the regional market jurisdictions. Now, a survey conducted by comparison website Finder has found that property is considered the best investment option in the current environment, ahead of shares and gold. Finder's latest RBA cash rate survey found 32% of economists and analysts surveyed said that property was the best investment, followed by shares at 21%, gold 14%, superannuation 11% and cash 7%. Finder also noted a surprisingly high percentage, 42% of experts believe that it was a good time for homeowners to put their property on the market, while a quarter said homeowners should wait a year or two before seeking to sell. The survey also indicated that this was a particularly good time to borrow to buy a home. Graham Cook of Finder says, this environment has pushed interest rates lower than ever. We've just seen the first under 2% loan hit the market, and that could be a sign of things to come. And he says, with investors fleeing the market, banks are fighting tooth and nail for owner-occupier customers. It's the ultimate borrower's market. If your home loan has a 3 in front of it, you're playing too much. Now, there's been some research published this week by major website realestate.com.au showing the locations which have shown the best price growth over the past 20 years. They did a study of the suburbs, the leading suburbs with the biggest growth in house prices over the past 2 decades, and found there were multiple areas where the average value of homes increased 5-fold. In Sydney, the most notable rises were in a cluster of suburbs in the city's southwest and the northwest, where major infrastructure projects improved accessibility and drew new buyers. In other parts of Sydney, gentrification, which saw warehouses turned into urban homes, drove another boom in property values in the inner west and the inner south, including suburbs like Redfern, Surrey Hills and Alexandria. The same trend drove up prices in regional cities like Wollongong and Newcastle. And Newcastle is the home of the suburb with the country's biggest jump in prices this century, which is Cameron Park, which is about 19 kilometres west of the Newcastle CBD. In Brisbane, many suburbs had house prices rising 400% over 20 years. The top suburbs in Queensland included 20 Brisbane suburbs, mostly middle ring and coastal areas, and also numerous locations on the Sunshine Coast. Windsor, in Brisbane's inner north, posted the biggest surge in its median house price in the state, increasing from $183,000 in 2000 to $1.08 million in June 2020. That's a big rise in 20 years. Media Watch, I'd like to look at how major media has reported the latest price data. At the beginning of the broadcast, I detailed the content of the house price information in the CoreLogic report published on the 3rd of August. The Financial Review, which in my view is the most dishonest newspaper in the nation, said that Melbourne had led what it called a further plunge in capital city prices in June. A plunge, a drop of 0.6% as a plunge. Another report in the Financial Review declared that the property market is falling even as we speak. And I wonder which property market they're referring to. Certainly not Adelaide or Canberra or Brisbane or Perth, which all have very busy property markets right now, nor any of the major regional centres across the nation where buyers are competing for the limited supply of properties and prices in many cases are rising. That newspaper, like The Australian, made the error, which is common amongst poorly informed journalists, of seeing Australia as a single property market. The Australian declared that in a headline that Australian home prices have fallen for the third consecutive month. At least they didn't use sensationalist language like plunge or nosedive to describe a situation where CoreLogic's home value index has dropped just 0.7% since March. And for the final word today, figures released today by SQM Research reveal national residential property listings increased by almost 4% in July compared to June, and that suggests that vendors are becoming more confident. All capital cities except Darwin experienced increases in their property listings over the month. The largest listings increases were in Sydney, which were up 8.7%, followed by Canberra, which was up 6.5%. And Louis Christa of SQM Research says it's somewhat abnormal to record a rise in listings during the winter months. Normally, we have falls recorded at that time. This could have been generated by the lifting of restrictions over May and June, which is enticing sellers into the market. In other words, as restrictions have been eased in most parts of Australia, not including Melbourne, obviously, vendors have become more confident about putting their properties on the market. Also in the SQM Research report published today were the latest figures on residential rentals. The new SQM Research figures show that nationally house rentals were up 2.2% in July and around 4% over the past 12 months. In the past month, house rents have risen in Perth, Adelaide, Canberra, Hobart and Darwin, and there was essentially no change in Brisbane. That's because vacancies are low in all these cities. But you won't be hearing about that in the media in the next few days. You'll be hearing that rents are falling in Sydney and Melbourne, which is true. But my question for journalists is, what about the 17 million Australians who don't live in Sydney and Melbourne? How about some coverage of their situation? Because the reality is, according to these figures, 2/3 of the national population live in places where vacancies are low and rents are rising, and so too, in many locations, are prices, despite everything that's happening in the background. Bye for now.